In this video, I will be valuing Visa stock using my stock valuation spreadsheet. I will value it using my 4 valuation methods: the discounted cash flow model, Benjamin Graham model, multiples model, and the dividend discount model to come to an intrinsic value of the company. If you want to use this spreadsheet for yourself, then click the link in the description to download a copy. Visa alongside with MasterCard form a duopoly in the electronic payments sector. Visa makes money in many ways. One of the main ways is through transaction fees. Basically, every time you use a Visa card, the merchant pays a small percentage of the transaction to Visa. These small fees add up due to the huge volume of transactions. They also provide other service fees for services such as fraud prevention and payment processing solutions to companies. They also make money from licensing its brand and technology to financial institutions. Also, they may charge fees for other services such as ATM network access or cross-border transaction processing. I have included other similar companies in the drop-down of my spreadsheet. This is a useful tool as you can quickly compare and contrast. Firstly, I will take a look at the financials. So we can see over the past 5 years, Visa has grown its revenue around 10%, which is very impressive. The revenue currently sits at 33 billion and the profit margin is 53%, which is a very healthy profit margin. In terms of the key metrics, we can see the PE ratio is above 30. So ideally, I do like to see this around the 20 mark. But if we do look at the historical PE ratio for Visa, we can see that it has sort of hovered around this figure. So it's always been in the early 30s, you can see recently, and I think the lowest it's been recently is 28, which I believe was around when the market wasn't doing so well in 2022. So if we do look at also its performance in 2022, so around that time was when it was at all-time lows, and it's not too high from that. So I wouldn't say the PE ratio is too high in historical comparison, and also big companies like Visa do tend to trade at a premium. In terms of its current ratio, it's well above 1, which means it's financially healthy, and its long-term debt to equity is well below 1, which is what I like to see. The price to free cash flow is 29, so ideally I do like to see this around 20, and it's not too far off, so potentially it is undervalued just looking at it from a cash flow perspective. But obviously I will do the discounted cash flow valuation to come to an exact intrinsic value. And then I've got other metrics here where we can see the return on assets, which was just over 20%, the return on equity, which was a whopping 46%, and the return on investment, which is 29%. So all of these are fairly positive numbers, and these are new additions I've added to the spreadsheet. I'm always trying to make continuous improvements, and if you do have any suggestions, do let me know in the comments below. Now, in terms of the analyst ratings, they've currently got it as overweight with a price target of 300, which isn't too far from the current price. However, as we know, analysts don't always get it right, and they do sometimes have recency bias, which is the purpose of this spreadsheet, because we can value the company for ourselves to come to our own intrinsic value that we would be willing to pay for the company. In terms of its technicals, it's just pretty much at all-time highs, so it's just recently slightly dropped, if you can call it that, off its 52-week high of just 0.16%, but it's up over 35% from its 52-week low, and the beta is below 1, so 1 would represent the market, and anything below 1 means it's not as volatile as the market. So it's quite good to see that the beta for Visa is below 1. In terms of its dividends, we can see the dividend X date was February the 8th, and then the dividend yield is 0.68%, which is a low dividend yield. But although it does have a low dividend yield, it also has a low payout ratio of just 22%, which means it's got a lot more potential to grow its dividend in the future. In terms of its earnings, there was a slight positive surprise on the revenue side and the earnings per share side. And in terms of its revenue, quarter on quarter, it increased by over 8%, and its earnings per share quarter on quarter increased a whopping 20%. And we can see just from this chart that the year to date is gone up just under 9%. Now I would take a look at the discounted cash flow model. So that's in this tab here. So what you can see on your screens is the calculations for the discounted cash flow model. But if you are using this spreadsheet for yourself, all you need to fill in is the cells highlighted in yellow, and that's what I've done. So I've taken the free cash flow from stockanalysis.com over the past few years for Visa and inputted it all in here. And as you can see, it's calculated the growth year on year, and then I have the average growth rate over here in this cell. So the average growth rate over the past few years has been 17% in terms of its free cash flow. I'm being a bit more conservative and I have projected a growth rate going forwards of 10%. You may choose to be more aggressive or less aggressive based on your own circumstances. And then here I've also got the information which I've inputted. So that's the cash and cash equivalents and the total debt value. And then if I scroll down, we can see the discounted cash flow valuation comes to 302, which I believe is higher than the current price and sort of in line with analyst expectations. So if I go down here and move this down, we can see this has already been populated as well. So now I will look at the Benjamin Gray model. The Benjamin Gray model, I have assumed a growth rate of 10. I've calculated this looking at the analyst estimates for the next 5 years. So their estimates for the next 5 years comes to around 13%. So I've been slightly more conservative than this and assumed a growth of 10. And then this brings my intrinsic value to 138. I do always say though that the Benjamin Gray model does give me my most conservative figure, so you may choose to not include this in your own valuation if you are using this spreadsheet. So next I will look at the multiples model. So again, I've only filled in the cells that are highlighted in yellow, and I've included similar companies in the industry like MasterCard, American Express and PayPal. Using this model, I've come to a valuation of 186, which I believe is higher than the Benjamin Gray model but less than the current price of the company. And then finally I will look at the dividend discount model. This is a great model to use for dividend paying companies. So again, I've only filled in the cells that are highlighted in yellow, and if you want instructions on how to use this for yourself, then I have created a video on how to use this spreadsheet step by step. So we can see the average growth rate of its dividend over the past few years has been around 14%, which is fairly impressive. However, I've assumed a more conservative growth rate going forwards. So I've assumed a growth rate of 8%, and then that brings my intrinsic value to 280. So if we go back to the original tab, we can see all of these valuations, and the average of these valuations gives me my intrinsic value. So that to me comes to an intrinsic value of 227. And we can see the current price is 283. I do feel like I've been fairly conservative in my figures, but I will give myself a margin of safety. So we can see I've given myself a 10% margin of safety, which means that the buy price that I would be willing to pay for this company based on these assumptions and this margin of safety is $198. However, as I mentioned earlier, you may choose to discount certain models such as the Benjamin Gray model. So if I do take this out, we can see that the buy price comes to a lot higher, which is 228, and that currently shows as a sell as it's over 19% from its buy price. So using these valuations, Visa does look fairly overvalued. But you may also just decide to use one model, such as the discounted cash flow model. That's entirely up to you. I will now compare my valuation with other valuations online for Visa. So I've got it valued at $256, and that's without any margin of safety. Yahoo Finance has it valued at $301. Simply Wall Street has it valued at $251. And Morningstar has it rated around $260. So mine's sort of in between or sort of around those valuations. If you made it this far, then I would really appreciate if you can like and subscribe. And also, if you do have any suggestions or comments on the video, then do let me know in the comments below.